The catalyst is that the Fed overreacted to a short-term artificial crisis, COVID. I mean, duh, just look back at 1920, influenza, 18 to 20, same thing. Came in, slowed the economy, and then went away. It's a short-term crisis. They acted like it was the Great Depression, and I know why they did this. The Fed has had to constantly stimulate the economy since 2009, and they don't know why. It's because the largest generation in history stopped spending, and the millennials have not come along to start to replace them yet. They're only doing that now. They don't know why the economy's weak. They just know it is, and so when COVID threatened it, they just panicked. And in 2 years, between fiscal and monetary, the greatest stimulus in history, $11 trillion stimulus in 2 years. That's half a GDP. I mean, we should have grown at 20% for a couple years after that. That only shows how weak the economy was. But the truth is, the Fed doesn't understand why. I've been talking about this since my first book in 1989, but my first best-selling book in 93, The Great Boom Ahead. This is, anybody can find my stuff. It's not like hidden or nobody's ever heard of it. Economists ignore it because it's not what they were taught. They don't think people matter. I say people drive everything. Young people drive inflationary because they cost everything and produce nothing. People between 20 entering the workforce and their peak in spending at 46 are the biggest single driver of the economy. Always have been. Nobody ever noticed it until this generation got big enough and somebody like me who wasn't an economist tripped along and noticed it. So that's why it is very simple. I mean, I had to do real analysis for Fortune 100 companies and then new ventures, and it was the new ventures dealing with the baby boomers, the younger baby boomer customers that woke me up to the baby boom, and then I studied everything about them, how big they are, how they're different, how much they earn and spend. We know exactly how much people spend on average at every year of their age, and when they peak in investment, and when they buy their first home, and their main home, and their first car, and their second car, and when they eat, for crying out loud, the most potato chips. You know what that is? It doesn't matter. Age 42. It matters that I can predict something that small down to the decimal point. Age 42. Do you know why that is? Average kid born to the average parent, 28, calorie cycle peaks age 42. If I can predict potato chips down to zip codes, my question is, what can't you predict in a world I was taught in my major in economics that nobody can predict anything past the next election because it's all political? I don't even consider who's president in politics unless they start World War III. I and any futurists have been talking about globalization for decades. That is the biggest trend in the world. What I've done is isolated what really counts the most. And you know what, globally, when you count 80% of us or more are in the third world, it's urbanization. 3 times the GDP per capita in Brazil or Argentina or South Africa or China or India. That's where all the people are. 3 times from people moving, the same person with no more education at first, from a rural area into an urban area. So urbanization is the biggest thing that globalization has produced. It's made it easier. Globalization's a trend. Demographics became important. Why? Because Henry Ford created the assembly line in 1914, which suddenly made the average person important because it 10 times their productivity. 10 times the productivity, and that's why he paid them $5 an hour when other people were paying him $1 or $2 and all this sort of stuff. There was not a middle class before Henry Ford. So technologies shape how affluent we can be, but also generations come in predictable cycles. Strauss and Howe are 2 people I studied up and down, okay? They studied the political and social impacts. I've studied the financial and economic, impacts of new generation. It's huge. And the baby boom was an outsized generation. And the more I look back in history, I said, oh, we actually get an outsized generation about every 250 years, So the more I looked at everything, the more I realized things are very predictable. It's just you have to know what's important. And nobody looks at what's most important. And I've had this theory out since 1993, mainstream, I sold hundreds of thousands of books and a million of one, It's just like economists still don't pay attention to people spend the most money at age 46. And that's what makes generation cycles way more powerful than they were in the 1800s. And Henry Ford making everyday people middle class only starting in 1914 and emerging in the roaring 20s and the 50s. That's what made the everyday more important and made my generation wave the single best cycle for predicting the economy, because even that 100 years ago wouldn't have been as accurate because people weren't as important back then. Everyday people lived like kings compared to the 1800s and 1700s, and forget going back towards caveman and stuff. So things change. Globalization is real. It's only going to continue. But within the globalization, different countries have stronger, weaker demographics. They're all urbanizing in the third world, but some of them are getting twice the kick out of urbanization because they have better education and better infrastructures, even though they're still third world. But when they move a person, they go from 5 to 15,000 GDP per capita, and somebody else moving going from 2 to 5. That's a huge difference. Or another country, they go from 15 to 40. That's when countries like East Asia, Japan and South Korea suddenly went from near third world countries to first world countries in a matter of decades. That has been what globalization's been about. Globalization makes trade, access to technology, it magnifies everything, but I can still zero down on any country and see how are they doing when they urbanize, how is their generation wave progressing, and how much kick do they get to their economy, because everybody doesn't get the same kick. We are not all equal as countries historically, culturally, urbanization, and everything else. So it makes the whole world more predictable, and most people see all this globalization and say, well, there's more change than ever, and no, you don't understand. Globalization and technology are making everything more predictable because we know more about everything, and we've learned this in a matter of decades. Literally, I started my research, demographic research, in 1981 when the first consumer expenditure survey made yearly now, the US, was published, giving this great information, knowing exactly when consumers spend money. I couldn't have even found this out before that. So technology helps us grow smarter, so complexity can actually turn around the other way and paradoxically become simple. And you know what the smart people from Steve Jobs to Henry Ford said? Simplicity is the essence, okay? Simplicity is the ultimate sophistication. Van Gogh said this, okay, way back, okay? The greatest innovator of his time. Simplicity is the ultimate sophistication was his very quote. Because the world is getting more complex, we need to get better about deciding what's important and what we can measure to make it more simple and predictable. And I've spent 40 years doing that, and I've basically been ignored by economists because I don't follow their normal stuff, which is why I didn't take economics, because it's not useful. I was looking to predict the world, and I found nothing of use in the economics curriculum, except for the theory of how, for the first time since the early 1900s, we realized we could create and print money and stimulate the economy. That's the only useful thing I learned in economics. And now that's being abused. It's not healthy to constantly stimulate an economy like that. It causes money velocity to collapse. Money velocity is the truth indicator, and it will tell you all this boom is going to vanish faster than you think, just like it did in the Great Depression, because it's made out of thin air. It's not fully real. See, my view is free market capitalism and democracy are two opposites, male and female in nature, that created the greatest explosion from the late 1700s. And we've seen more progress since those two things happened than all of 300,000 years of human history combined and cumulative, okay? That's how powerful this has been. We just need to learn how to help it. We are fighting it. They just declared in 2009, central banks around the world, and particularly the Fed in the United States, declared war on free market capitalism, okay? And around the world, all types of leaders are trying to suppress democracy. These are the two things that have made the developed countries the richest in all of history in the shortest period of time, and we should be doing more to support this. If you're doing the wrong thing, just like in business, then you're going to eventually fail. You can't be in the wrong technologies when new technologies are 10 times as good and replacing you and not be replaced by the new leaders. So what I'm literally rooting for, and I tell people in my newsletter, I am rooting on this entire money printing BS, greatest BS program in history, something for nothing, to absolutely, utterly fail, so nobody ever thinks of doing it again, and nobody who ever was a proponent of it is ever listened to again, and maybe people start listening. I'm not the only one. There's plenty of people criticizing this, but nobody in the mainstream. Robert Shiller doesn't dare, and he's the best mainstream economist there is. He doesn't dare criticize this machine that's happening, and everybody doesn't want a recession. Recessions are like sleep and waking. You can't have one without the other. And if I look at history, same ratio, about 70% boom, 30% recession. 70% waking, 16, 18 hours, and 30% sleep. They are necessary. We can't live. Try not sleeping. You won't make it 3 nights without turning into a blabbering idiot. Guaranteed, okay? This is the problem. These people are not going to get it. None of them came out of business. I said, what mainstream economist ever looks like they had to run a business? You know, two of the most important things people do, okay? No, not a one. Look at there's hardly a one, okay? So that's the problem. They're not going to get it. This approach has to fail. And it has to fail enough that people say, okay, and again, I keep reminding my subscribers, and when I give talks, what's happened? Yes, we keep doing this stimulus, something for nothing, money out of thin air. We keep bubbling up, but guess what? We keep crashing to new lows every time. So if we bubble up now, globally the most ever, and we crash to new lows one more time, I think the world finally gets it. Unfortunately, we have to fail miserably to get what should be obvious. Printing money out of thin air can be a nice short-term thing to just give the economy a little buoyancy so it doesn't overreact to a crisis. But as an ongoing policy, it's like hey, I could feel really good if I wanted to right now. There's a number of drugs and things I could take and feel really good for the next 5, 6, 7 hours. You just wouldn't want to see me or anybody on these drugs after they come down, okay? It doesn't work to cheat and to feel good artificially. All of our growth since 2008-9 downturn have been 100% from artificial stimulus, not from real productivity, people producing real products, earning real profits, reinvesting those profits. When you do that, you have positive money. That's how you know you're doing that if you don't know otherwise. Money velocity goes up like it did in the 80s and 90s. It's been going straight down the most in all of history since 1998. That is telling you we're doing the wrong thing. And if the stock market's going up, it means the stock market's on crack and doesn't know what it's doing. And it's going to take a big fall.